RePlay by Hannover Re. Expert insights on life and health insurance.
Why looking at risk from a purely local perspective can limit growth in Asia, how insurers can adapt their decision-making to stay competitive, and what connects Asian markets that operate under incredibly diverse conditions across the region. Welcome to RePlay by Hannover Re. I'm your host, Susanne Loomis, and today we'll talk to Sören Kruse about the Asian life and health insurance market.
This podcast is for general information only, no professional advice, and is subject to change. You can find the full disclaimer in our show notes.
Sören, who's heading our life and health operations in Southern and Eastern Asia, is joining us today. Welcome, Sören.
Hi, Susanne.
So you started your career at Hannover Re in 2013, where you focused early on life and health markets in Asia. You also spent some time in South Africa for Hannover Re. And then you moved to Malaysia and returned to the Asian markets. So you've seen the region from different angles, and not just technically, but from working closely with clients across the very different markets.
Yeah, and it's exactly the people and the business cultures who differ most between these different regions.
Mm-hmm. Well, that's really good insight to have, because Asia is home to 60% of the world's population. And its total life insurance premium volume has surpassed that of the Americas and EMEA over the last 10 years. So from your vantage point, what would you say is the biggest misconception about the Asian insurance market?
Yeah, for me, the biggest misconception always is that Asia is one market with one growth story. It's really not. It's a set of fundamentally different insurance realities. Because one could easily think Asia is high growth economies, low insurance penetration, so you have huge opportunity for insurers.
And that's not the case?
Well, I would say it's only half true. So when you look into markets like India, Indonesia, Vietnam, that story absolutely holds. You find young populations, an expanding middle class, rising incomes, and a very low insurance penetration. But when we shift our view to Japan, Korea, or Hong Kong, you do see that opposite. Aging populations, very high penetration, and there's really no easy growth left. So one really should not underestimate the diversity in Asia.
Yeah, absolutely. And given how different these markets are, do you still see common threads across the region?
Yeah, so despite that diversity, there are a few powerful common themes across Asia. So first, the need for protection is rising everywhere. So whether you talk to a young family in India or retirees in Japan, there is a growing gap between what people need financially and what is currently covered. And then I really see all markets being under pressure at the moment, just from a very different angle. So margins are getting tighter everywhere. You see medical inflation being on the rise, especially in Southeast Asia. And when you look into the developed markets, aging and longevity are enormous societal challenges.
What else would you say?
Yeah, maybe the most unifying aspect, that regulation and capital are tightening everywhere. So that's a common reality across all Asian markets.
And all of that probably also creates a lot of pressure on how fast companies need to move. Where does that need for speed show up most?
It's something that fascinated me the most. So when you look into product cycles, it really works different in Asia. Most European markets optimize for product robustness. So you really find products that are designed to last. You find them in the market for 5 years, 10 years, sometimes even longer. And it justifies a development time of 1 or 2 years.
Right.
In most of the emerging markets in Asia, things are faster. So speed and adaptability outranks product longevity. So it means that this first mover advantage really matters, especially if there is strong competitive pressure. So products can be designed a little bit simpler. We use modular variations, but the development time is rarely longer than half a year, and the product's on the market only for 1 or 2 years.
Wow, is that the fastest we see?
Yeah, recently there are markets that are even faster than this. So look into China or Vietnam or Thailand, where products are sometimes in the market for a few months only, less than half a year. And we develop them within, let's say, a month or 1.5 months. So you don't find traditional marketing campaigns. The product itself is the campaign. So we really optimize for seasonal sales and for platform partnerships.
That is quite a contrast. And how would you describe the differences between the markets in Asia?
We talked about that a little bit already, so I would really split Asia in these two worlds. You find emerging markets, Indonesia, Vietnam, India, where the challenge is really about scale and access to insurance.
Yeah.
You have untapped customer segments, lots of innovation in terms of distribution. So bancassurance and digital channels have been on the rise recently, where premiums are payable via mobile wallets and allows simple micro-life transactions, especially in rural or low-income areas. But with that huge potential, well, there's a lot of competitive pressure that kicks in. So emerging Asia is under pressure to grow sustainably. Developed Asia, on the other hand, is under pressure to stay profitable. So these developed markets as Japan or Hong Kong or South Korea stagnated over the last couple of years. And with the highest life insurance penetration in the world, the focus shifted to product innovations and increasing the value per customer. I personally still think that there is some growth potential left, especially by serving customer segments that were previously considered uninsurable, for example, due to health reasons.
Right. And one area where the pressure to stay profitable becomes very tangible is health, especially with rising medical costs. And to make that a little more concrete, where does this hit insurers most?
Yeah, medical inflation is probably the most immediate and visible pressure point across the region. A true challenge for long-term sustainability. Let's look into the drivers. First, you really see this strong increase in utilization and cost across many markets. So healthcare access is improving, more advanced treatments are becoming available, and that's great on the one side, but it also means that claims costs are rising significantly.
Yeah, and what about changes in premium?
Yeah, we see this growing mismatch between pricing of the products and just the reality. So products were designed in a very different cost environment. Premium increases struggle to keep up with inflation, and this tight competition makes repricing really challenging.
Is there anything else?
Yeah, I would also say that it really exposes a bit of a weakness in the product design itself. So many products were designed to be very rich, very open-ended, sometimes with quite limited cost control and with guaranteed renewability. So in this overall environment, medical inflation challenges the sustainability of an entire product line.
And looking beyond cost pressure, and you mentioned this earlier, there's the demographic side of it. How does that affect insurers?
Yeah, let's look more deeply into Japan, South Korea, Hong Kong, but also parts of China these days, where populations are aging faster than anywhere else in the world. Japan is the world's oldest nation, with about 30% of its population aged 65 and above. I mean, just for comparison, that is nearly twice as much as in the US. So the burden on public pension schemes and medical systems is immense, resulting in retirement savings and health coverage gaps.
And how do insurers react then?
Yeah, so insurers are trying to move into areas like private annuities, supplemental health, and long-term care. So, for example, in Japan, medical riders and critical illness policies cater now for a much older clientele. Similarly, in South Korea, expanding offerings for the elderly is a topic at the moment, and policies cover dementia care. The challenge, though, is how do you stay profitable in such an environment when you cover an older, a higher risk population? In all of these demographic dynamics, so the aging, protection gaps, product affordability ultimately translate into one key question for insurers: how much risk can you actually carry and at what cost?
Yeah, which brings us directly to the role of capital and regulation. Capital requirements are tightening globally. And when you look at Asia, what feels different compared to other markets, let's say Europe?
I would say the most fundamental difference is fragmentation. So in Europe, you have Solvency II. It created a single harmonized framework. In Asia, you will deal with multiple regulators, different versions of risk-based capital regimes, different interpretations of IFRS 17. So insurers who are operating regionally are effectively managing multiple capital and accounting systems at the same time.
And there was also timing issues, right?
Yeah, you're right, Susanne. So in several Asian markets, IFRS 17 and new capital regimes were introduced at the same time or within a short time frame, like in Korea or Hong Kong. So what makes Asian markets unique is not necessarily the rules themselves, but the fact that multinational insurers are dealing with fragmented regimes, simultaneous transitions, and rapid growth all at the same time.
Yeah. So where do reinsurers then fit into all of this?
Yeah, that's exactly where the role of reinsurance has evolved quite significantly. So it's not necessarily longer just about the pure transfer of risk, but increasingly about supporting clients in managing volatility, capital, and growth at the same time, as capital management is often in Asia the factor that determines whether you can grow in the first place.
And what does that support look like? You mentioned speed earlier. When a client calls, what happens during the next couple of days?
Yeah, so I really want to be fast here. So on that very first day, we ask ourselves, is there any particular reason why we should not go ahead? So I really don't want to waste anybody's time, nor ours, nor our clients. So if there's a particular obstacle, we're telling clients upfront.
Yeah.
But if not, we sit together with clients immediately to work with them on a solution and solve their problem together. So that's a very iterative process. It goes back and forth. So I don't believe that there is this one single solution for a problem. There are different options, different trade-offs, and I really enjoy this interaction as it creates this alignment along the way.
And then what happens next?
Well, I would say within a week, clients should not just get a response from our side, they should have a very clear sense of direction. Potentially an initial solution on the table, but that only works with our very strong empowerment approach.
Absolutely, and that comes down to teams making decisions locally. And what difference does that make when you compare it to a more central setup?
Yes, I always tell clients that if you talk to a client manager at Hannover Re, you talk to a decision maker.
Right.
And so they don't have to come back to a large team or refer decisions to committees or hubs. The person has the commercial authority to agree with you on reinsurance solutions. So that surely makes things faster. And I'm also convinced that people directly in the market with clients understand the actual needs and pain points much better than any centralized function would.
And what else on the cultural side is important to you when it comes to working with clients?
Yeah, so we spoke about this empowerment approach already. So let's talk about our no politics approach.
Okay.
It means that everyone at Hannover Re is working for the good of Hannover Re and not for any personal advantage. It also means that all of our internal processes are designed around finding a solution for the client as fast and pragmatically as possible.
Okay, so help us understand this a little bit better. What does the no politics approach look like in practice?
Yeah, so it, for example, means that traditionally we measured reinsurance contract by contract. Each agreement is assessed on its own performance. But now with our clients, we really take a drastically different approach. Instead of looking at all of these individual contracts in isolation, we look at the relationship as a whole. So not only across all business segments, but also across all markets in the world.
What do you mean by that?
So let's take high net worth business in Asia as a really good example. Many insurers here need very high coverage limits and capacities for this type of business. If you would look into this business very locally, it can appear very volatile. So by taking a global view, we can balance that risk with business the client places with us, for example, in other regions. And that allows us to offer much higher capacities to clients than a purely local approach ever would.
Okay, got it. So it really comes down to seeing that business in a broader global context. Let's take a step back from that. What excites you most about the insurance industry in Asia?
Yeah, for me, the one really exciting aspect about it is that you find very few regions where the insurance industry is putting new ideas into practice at scale. In many markets, innovations are happening in pilots. In Asia, it often happens across millions of customers almost immediately.
Wow, and how does that show up in, let's say, distribution?
Yeah, so when I think about new product innovations, insurers are embedding such products directly into digital ecosystems, like mobile wallets or super apps. So instead of long sales cycles and slowly scaling up these portfolios, they can test new propositions with real customers almost immediately.
And what about underwriting?
Yeah, I also see in general a much greater willingness to experiment with simplified underwriting, predictive underwriting, use of alternative data. So it allows us to continuously adjust and improve models in real time. So you can test new ideas on a very large scale and within a very short time frame to figure out, is it working or not?
Yeah, that does sound really interesting. And where do you see things going next?
I'm truly excited about the region because overall, despite all the differences between the markets, the unifying theme across Asia is this trajectory of change. Even if growth rates have moderated recently, the fundamentals, so growing income, an urgent need for protection, and a tech-enabled population ensure that there are plenty of opportunities ahead. So if you want to understand where our industry is heading, Asia is probably one of the most interesting places to watch right now.
Thank you so much, Sören. That was a really helpful perspective.
Thank you so much, Susanne.
So today we talked about why Asia is not one single insurance market, but a region of fundamentally different realities and what still connects them. We looked at what pressures affect products and sustainability, and we discussed what it takes to successfully operate in this environment. Thank you for listening to RePlay by Hannover Re. We hope you found this conversation helpful, and make sure you subscribe for more episodes, leave us a review, and stay connected with Hannover Re on LinkedIn. Until next time.
The thoughts, ideas, documents, and other content discussed or shared in this podcast are not intended to constitute any professional advice. Hannover Re and the participants are not liable for any damages resulting from the usage of the content of this podcast. For further information, please see the show notes.